Hey, I'm Supats, lifelong solopreneur. Now living my life with only one passion to help solopreneurs to launch their digital products on fast track so that they can be profitable as fast as within 1 week, and they want to scale, they can join the membership. And as a bonus, I show them how they can sell their digital products all over the world using affiliates. Without further delay, let's get started. Hello, hello, hello. Welcome to New Beginning Inspiration for You podcast. And today we have a actually question and answer for one main question people always ask. There are some things in your life you cannot live without and you cannot deal with them, and we just want to know how can we do what to do, because those are really vital things, these are needed things, but still we don't know how to apply for them, how to use them, what are the features, what are the benefits. So that's the topic about insurance, and today we have our guest Tom Basey. He is going to cover all of your questions regarding insurance, because he's specialized in various insurances, not just one kind, but various insurances. You think of Medicare, he knows about it. You think of health insurance, he knows about it. You have questions about life insurance, he knows about it. If you are asking about second careers, he knows about it. So without further delay, let me invite Tom. Tom, stage is all yours. Please take it away. Welcome to New Beginning
Well, first off,
Inspiration
I'd
for
just
You
like to say thanks for
podcast.
having me. I'm grateful. I always enjoy talking to you, Sue. So you're right. I do a lot of different insurance, but I think I'll issue a disclaimer. I don't do all of them. Actually, I protect people, not things. So actually, my expertise isn't in cars and homes and business. I don't do that, but I do have expertise when I'm protecting people. So you're right in the health insurance and the life insurance domain. And what I would offer is, I think a lot of people have at least some insight. At least they've heard of certain types of health insurance or life insurance. The one I'm going to throw out there that people don't know, that I didn't know myself until several years ago and I got my own, is long-term care insurance. I'm a big proponent of that one. Most people, I didn't even know what that was 7, 8 years ago when I got my own policy. But yes, I protect people, not things, and I love talking and helping people understand how those different products work.
Okay, so how did you start your journey? I would like to know more about how you got
Mhm.
started into this
So
field.
I'm in this. So I'm an independent health and life insurance broker, but I am here kind of by accident. Actually, in a my yeah, I was an engineer
Ah,
by undergraduate, and then I did do graduate work in business. But I worked in corporate America for over 30 years at some of the biggest companies in the world, Telecom. And then in 2010, I decided to switch over to medical device. I spent a lot of time in medical device. Uh, and then I wanted out. So in 2015, I started taking online classes. If you have an undergraduate degree at some universities, you can study online to get certified to teach. So actually, I wanted to stop commuting. I wanted to have less stress. I wanted to control my life. And so I was going to be a teacher. Now maybe I was naive on the stress part, but bottom line is I took all the classwork, and the only thing I was lacking was student teaching. I'd taken all the coursework. I'd passed 7 through 12 math tests for my state. I'm based in Texas. And then I'd passed the elementary through 12 physical education. So I was going to teach math and coach soccer. And I was going to have 3 months off in the summer and 2 weeks off at the end of the year and a week off at spring break. And I wasn't going to have to commute as far. It was going to be great. But then somebody explained to me insurance stuff. And so actually I got involved that way. So actually I pivoted it yet again. So I had one pivot going. And so I don't, it wouldn't be inaccurate to call me an insurance salesman, but I don't like that. I don't like to be sold to, and I don't want to be called an insurance guy. So I take a consultative or educational approach. So really in the, not unlike teaching, I'm just kind of helping people understand. That's really what I'm doing. But instead of in a classroom, it's, and about math, for example, I'm actually just helping them protect people. So that's my answer to that. It's a non-standard answer, but that's what's going on with me.
so, what is Medicare? Because we have been actually dealing with Medicare for a while now, and still
Yeah.
it is not clear to us.
Yeah.
So, will you please
That's a
explain what
great
is
discussion. So
Medicare?
number one, I didn't know what Medicare was at one point until someone came to my house to enroll my mother-in-law, and I wasn't near Medicare age, and I thought, but I'm going to understand this, one, from a job standpoint, and two, because it is available. So that's the thing. Medicare, not to be confused with Medicaid, which is different, but Medicare really is health insurance from the federal government in the US for people who turn 65, or there's some exceptions. If you get permanently disabled after 24 months, typically you can get on there as well. And so, but the thing is, that red, white, and blue card that you get from the government, it's really not enough. It's been around since the 60s, and I like it, but you really don't want to roll with just that red, white, and blue card. Number one, it doesn't cover any drugs. So even if you're not taking any drugs, the day you do need to take drugs, it's not going to cover you. So you need at a minimum to have some kind of drug covered solution. And then candidly, the other thing about that thing, as soon as you go to the hospital, there's a significant deductible. Maybe it's $1,600 or something like that. And not unlike things that people might get from their employer, there's a 20% copay that you have to pay, and it has no out-of-pocket maximum. And so my point is, the good news is Medicare is that red, white, and blue health insurance from the government. But really, what you then need to do, and that's the thing, I help people understand it and help them enroll and get it, but I really don't participate. Where I participate then is, once you get that card, then you either need to go ahead and get a supplement to it, things that will like cover that 20% that you don't want to cover, or that deductible from the hospital, and a drug plan. So you can get a Medicare supplement and add a drug plan, because supplements do not cover drugs. You can do that, or you can get an Advantage plan, which have only been around since the year 2000 or so. And each of those work differently. And so my job is to explain how those work. But all the major carriers in the US that offer health insurance, they'll do either one for you. You could buy an Advantage plan from them, and that typically has drug coverage included, or you could buy a Medicare supplement and a drug plan from them. And in fact, you could do a combination. You could actually buy the Medicare supplement from one company and then the drug from another. Sometimes you'll do that depending on someone's list of meds. But that at a high level is Medicare. And I'm grateful for you asking, because people really don't understand. So there's Medicare, and then you want to do something else, supplements and drug plans, or an Advantage plan above and beyond getting in Medicare from a major carrier.
So what are the differences between supplement plan and Advantage plan? Because for Advantage plan, it looks very enticing, it looks very attractive, but if you read the reviews, it says that most of the applications which are sent for Advantage plans are rejected, or they take so much of time that either the patient dies, or means basically, because they run around a lot, and they generally don't approve medical Advantage. So I want to know the difference between supplemental and Advantage, and I want to know the pros and cons for
So
both.
one thing, the way I can offer it, I'm not in my 60s yet, but the thing is, I have a cousin who lives 20 minutes away from me, and I have a mother-in-law, and they are both in the Medicare world. One has a Medicare supplement and the drug plan, and the other one has the Advantage plans. And so I have exposure to all of them, and they're my clients, so I have to live with whatever that, if they're not satisfied, I'm going to hear from it. So my cousin has the Medicare supplement, and she has a supplement, and she has a drug plan, and she has the supplement from one company, and then she has the drug plan from another company. And the reason that is because we optimize wherever the lowest cost of her drugs and the cost of the plans. The plans can be very cheap, or they can be very expensive. But as you might imagine, the more expensive drugs you have, you pay a more expensive plan, and it'll cost you less. But bottom line, we've optimized it. She loves being on that side. Now, she has a little bit of Advantage envy, and she'll ask me about it periodically, and then she'll say, well, no, I'm not going to do that. What she likes about her plan is she has very thorough coverage. She has almost no out-of-pocket cost for any of her care. So she had spine surgery a couple of years ago. It cost her a few $100 basically, only because she hands her Medicare card to the doctor or the hospital or whatever, and she says, charge those people for that. Anything they're not covering, well, then here's my supplement, charge them. And so her supplement pays for almost everything it does. So she loves the fact that there's almost no cost of care, and she can go anywhere that Medicare is accepted. So she doesn't have to worry about checking doctors or whatever. If Medicare's accepted, it's good. So she loves that. So she loves that solution. Now, the thing she doesn't love is it is an expensive solution. Every year the price goes up on that thing. And so she's way past Medicare age now, and it costs significant. But she still says, but I'm going to keep paying that because I like to have almost no out-of-pocket care. She likes that, but it is expensive. Now, she has envy of my mother-in-law, who has the Advantage plan side, and she has it from a different carrier than either of the other two. So in other words, I've got that's the thing, I'm a point with all different carriers. And again, from my mother-in-law's side, we optimize the selection. She takes a bunch of eye drops, but she's on one plan. Her drugs are covered in there. She has, on the Advantage plan, you can get an HMO or a PPO. HMO means, it stands for Health Management Organization, but I think of it as terms as have to. You have to stay in network if you have an HMO. If you go to some doctor that's not in network, well, that's going to be on your dollar. You're going to have to pay that. She actually has a PPO, which stands for Preferred Provider Organization, which means we prefer you stay in network. That is, it'll cost less. You can go out of network though. So I'm just going to make up a number, but it's an approximate. It's correct for, it depends region to region. But if you go to specialist in network on her plan, it'll cost about $35 copay. If she goes to out of network specialist, it'll be $65. Still not bad. It costs more, but it's still not bad. So on my mother-in-law's side, she has what you hear about on TV all the time. That's the thing. They tell you the good stuff. They don't mention the bad stuff. But so she has the dental and the vision and the hearing, $0 gym membership. Some of those plans offer transportation benefits. Some of them give you, typically she likes her over-the-counter credit. So you get credit, you can buy stuff. They'll give you some amount each month. Some of them even give you a Part B give back. So they are very attractive. What they don't mention on TV is if you go to the hospital. So she's been in the emergency room once, but not overnight stay. She hadn't really been in the hospital. But if you go, they neglect to mention what that's going to cost. I mentioned my cousin had spine surgery and it cost her $300. Well, if you go and stay in the hospital on an Advantage plan, it varies again, but I use a number about $300. It'll cost you about $300 every day you're there for the first 5 days, and then it'll drop to zero. So in other words, if she was there 6 days, it's $1,500 copay automatically there. If you go to the specialist, I mentioned in network, $35. If you get some kind of medical imaging, like an MRI, maybe it'll be $100, $200, $300. So my point is the cost of care costs a lot more. They don't mention that on TV. But what they do mention, what she does like, she gets all those extra benefits. Those plans are often available at $0. So she likes it. She pays $0 a month, or my cousin pays X $100 a month, whatever that number is, $200, $300 a month. And so one of the over generalized ways I might say is one is pay me now versus pay me later. But that's the thing. I simply present it to everybody, and people ask me all the time, said, which one should I do? And I say, sir or ma'am, you know which one you should do? You should do the one you feel most comfortable with. You need to understand how it works and get either one of those. Some people, they want to pay $0 a month, and they feel like I'm not going to the hospital for some time, and I'm going to sign up for that thing, and I'll have dental and vision hearing, or I can't even afford the supplement. So that'll happen. So the good news is I just help people understand it. But that's the thing. One, at a high level, you might say pay me now or pay me later. Even that may not be quite accurate, but that's one to think of. But the other thing is you get more bells and whistles on the Advantage plan, but the cost of care will be significantly more. So that's a great question. That's my answer to that.
So if you choose one, can you change
Great
it to
question.
later another one?
On the Advantage plan side, you can change every year. That's the thing. You hear all this kind of stuff. Every year there's an annual enrollment, not unlike back when people worked and they had it. And so you can change every year. If we do a good job and match you, often you don't have to change. You can just sit there and just let it ride every year. But sometimes if you get one medication, or sometimes if your favorite doctor says they're not going to take that, so there are reasons why. But so every year you can change that. Typically on the Medicare supplement, typically you do not. And that's the thing is, that's because it is, when you sign up the first year, they don't even ask a lot of underwriting questions. You're turning 65, and so it's like, all right, we'll just take you, and you sign up and you're in there. If you go 3 or 4 years and you're like, I'm paying too much, I'm shopping, you can shop it. We can try to find someone else. But then that's the thing, you're 3 or 4 years older. If you've had any, there's going to be underwriting. So they're going to ask questions. Have you been in the hospital in the past 2 years? Have you had any diagnosis or whatever? And when they ask those questions, then potentially they will either deny you or they will charge you a higher than the standard rate. So it is easier the answer to your question in the short form is it's easier to change on the Advantage plan than on the Medicare supplement. But the thing to be aware of is upfront, if you go the Medicare supplement route, it's easy to jump to an Advantage plan if you want. Any year you want, you can just jump right in there because they don't have the requirements. They don't do the underwriting comparatively. It is much harder to go to a Medicare supplement if you start with Advantage plan.
I also heard that doctors, they generally tend not to accept Advantage plan. So I don't know, means is it a true
Well, what I
or
would offer is
false?
this. It varies. I mean, literally these plans vary zip code to zip code. And what I find is the larger carriers. Now, let me think about this a little. I go ahead. If one Googles the largest healthcare providers in the country, you're going to find in the Fortune 10, there's a bunch of them. So they're big companies. Typically, I find that those are taken by a lot of doctors, but clearly not all by all of them. And so as a broker, I have nice tools. So I type in 2 things typically, besides your zip code, for example. I type in your list of doctors and your list of medications. But to your point, I can filter. So I did analysis for somebody yesterday. There were 34 plans in their zip code available, and they only had one doctor they wanted. As soon as I clicked show me only plans that are that doctor, it went down to 24. So of those, there are only 24 plans. And even of those plans, several of them were actually from the same company. A given company may have more than one HMO and more than one PPO. So really there was only 3 companies that she could choose from. And then when we did that, she only had 2 medications. We typed in and we can kind of look at it and see. And then either based on the medication costs or perhaps the cost of a hospital stay, because it does vary plan to plan. So she could choose that way. So the answer is it just depends. But typically, like I find the more urban someone is and the bigger the care yards, the less that's a problem. The more rural, if you get farther away, then there's fewer choices. There's fewer choices of plans, and the doctors might take as many. But in a big metropolitan area, typically you can find a lot of folks that will take one or more of your plans.
Yeah, and I know actually the supplement plan, I just keep on getting these letters from AARP. So, do you have any opinion about AARP
Yes,
supplementary
and or
plan?
what I would say is this: number one, for clarity, AARP is some kind of over 55 advocacy group, right? That people know their newsletter and that kind of stuff. What happens is they actually don't do a plan. Really, they partner with different companies for different things. So, for example, if they do a life insurance plan, I think they actually partner with New York Life, or I think it's New York Life. I'm not sure who it is, but they partner with somebody there. When they do their Medicare plans, they're actually partnered with United Healthcare. And so that first thing I would offer is that AARP just happens to be who they're co-branding with because they have exposure, but really it's United Healthcare. I do think a lot of United Healthcare plans, both their supplements and their advantage plans. So one, I will say that is I think highly of them, but what I also offer is, but you just got to look around and see. So a supplement, sure, I like them, but what you do is you can shop it in your area for a given supplement. When you shop that plan, there'll be different prices for example, for someone turning 65 this year, the most thorough coverage one can get is a G plan. And so if you get that G plan, you can buy that from multiple companies. The government defines what a G plan is, though. Unlike the advantage plans, where there's a lot of variety in what they might offer, a G plan is a G plan. So whoever you buy it from, they're approximately similar. Now, what will vary is the rates at which the pricing go up. And so I do like United Healthcare, but depending on where someone is, I also like paying less if there's a lesser plan and it's still a major carrier. I like that too. But that's what I'd offer on
Okay, thank you. So, I'm just shifting to the other area. I just wanted to ask you, so what is your definition about Web
that. We can
3.0?
talk about that as well. That's really kind of my other hat. So I am an entrepreneur. I'm an entrepreneur and I love.
Yeah, because yeah, you are entrepreneur, you have so many things. So
Sure.
I just want
No,
to
I love
cover
it because
whatever
I'm
I
excited
can
about
cover.
that.
Thank
So
you.
first off, I am an entrepreneur and I work in the insurance industry as a broker, and I love that. When it comes to Web3, that's new technology, and I'm very excited about Web3 and what it offers. And so one thing I would say that um, I'm old enough that I remember when companies didn't do business on the internet. Companies didn't have websites, and people didn't use their phone to find things, and people didn't purchase things. And so really there's an evolution. And so when you ask Web 3.0, first thing I say is I lived through Web 1.0, which really is no longer around. That's when you used to just kind of log in via dial up and you could look around and see some things. It was read only. All you did was read. Web 2.0, I lived through that, and the part of the telecom of my business, I worked through that. And so that's when we became mobile and we started doing e-commerce, and we had social networks. And so suddenly for Web 2.0, we were mobile, we were buying things over the internet, and we were connecting, and we were reading and writing. We were putting a bunch of content out there. And I do that. You do that. We do this. Web 3 is just the natural progression, and it's coming, and it just adds additional functionality. And so I'm excited about it because of the functionality. So I'll just remark briefly about that. So number one, there are a lot of people, social influencers, I will say, who've had great success as entrepreneurs using social media platforms. Okay. But what I would offer is that in Web 2, that's the thing. Those social media platforms, they're owned by somebody like a corporation. For example, Meta owns Facebook and Instagram. And then Elon Musk holding company has Twitter, right? And so these and then TikTok. So my point is they're owned by that. And so if I or you put content out there, when we sign up to participate, we're saying we want to participate, we like the functionality, but we kind of give away our rights to the content. Web 3.0, it's going to be different. And so there will not be an ownership. It will be like shareware, like a Linux operating system or shareable software where there's no owner. And so when I put the content out there, I own it, not somebody else. And so I'm attracted to that. And so that's what I like about Web 3. There's a couple things, but the main one is the ownership of the content. Right now in Web 2, we're mostly in Web 2, you don't own your content. In Web 3, you will own that content. And that's the thing, you will be able to kind of earmark it and have it a unique ID associated with it. And so wherever it goes, you can own it. And the other thing I guess I would offer, that's the thing, there's something called a smart contract. Another way people say it is code is law. And so in theory, like right now, if I see something on a social media thing and I like it, I'll reuse it and I'll post it again, comment, mark on it or whatever. Well, at the end of the day, whoever made that content, if the platform is designed as much, maybe they will monetize it, get compensated, but perhaps not. At the end of the day, the corporation, in a Web3 scenario, if I make an image of something, a recording, a video, an image, a sound, a photo, a video, whatever it is, and you share it, I can have a smart contract that says, okay, but you got to pay me. So it allows, what I like is it democratizes the ownership of content. So that's what I'll say about Web3.
But on which platform? Because social media, I always tell, okay, you own your email list, but you don't own social media, because I have heard about Facebook jail, LinkedIn jail. You can lose your accounts without even knowing it, why you are losing. And I personally was into Facebook jail, LinkedIn jail, and I got my account back because I asked them, why are you putting in me jail? Tell me. And then they evaluated and they said, oh, it was mistake on our part and all. But sometimes people cannot even get their account back because they just cannot reach to the customer care. So how it is related to Web3 means, you say, okay, you own the content, but are there any these jails available over
There's
there?
not a jail. Well, I guess there could be. For the most part, there's not. But the downside of that is also there's no one to help you. In other words, I'll talk about shareware or open source software. If there's a piece of code that I like and it's open source, I can use it and you can use it. Often we'll sign up for it and we kind of agree. We say we will not make a bad line of code or something on it. But I guess my point is no one owns it. And so if there is an error, as a community, we can agree to fix it or not. But my point is when it's shareware, when it's open source, there is no owner. And so there's no one to put you in jail perhaps, or it might be a rigorous process. But the other thing is there's no one to help you either. So the challenge is if you lose your ability to find your content or to access your content in open source, then you're hosed. You have to find them. And so now there are things. So I'm going to talk about a term wallet. And so if you have there's wallets on many people's phones, you know what I mean? But that wallet, if you've got one in the Web3 space, as long as you have access to it, you can find it. But if you can't access your wallet, well, then you can't get to your content anymore. So that you can be self-imposed jails, or you fall out of the system or something. So that's what I'd offer there. But that's saying an open source scenario, typically, I'm gonna choose. I don't want to get too technical here because actually there are ways to an open source code. I like that as an example. You can't do whatever you want in open source. There's a community. There's a control over it. But the more distributed it is, the more decentralized it is, the more flexible it is, and the more versatile it is. And yet there is a challenge of support. There's a challenge of regulation. I'll call it compliance. And so a well-designed shareware or open source code is designed to minimize either the problems people will have or the bad actors, if you will.
Okay, yeah. Thanks a lot for being so comprehensive, because people have so many questions. So what are the tools as an entrepreneur valuable to you? Because see, most of my audience is solopreneur, entrepreneurs, small business owners. So they would like to know more about that. So will you please explain?
Well, yes, I will. But for the first thing, to be complete, when I say Web 3.0, there are actually several, just like I made an analogy for Web 2.0, how we went mobile and social media. There wasn't just one thing. So actually in Web 3, AI is a part of Web 3. In other words, that's the thing when we make the big change. So there will be AI, there will be IoT, the Internet of Things. That is, everything's going to be be smart and connected. So your coffee pot will know how many cups of coffee it had, and it can reorder it. So there's big data, just huge volume. So extended reality, and then blockchain, which allows for the decentralization. So that's my point. When I say Web3, it is composed of AI, IoT, Internet of Things, big data, extended reality, VR, metaverse stuff, and blockchain, and all those things together. Just like how e-commerce and social media and mobile computing made Web.2, all those technologies are going to make Web3. So there's a lot of different. So when you say tool, there's a lot of different ones. For someone today, to me, the most important one really is AI, because it's further along than decentralization. But I like to talk about decentralization, let people know. So number one, you should get educated. There are courses online. I have a course online for a high level, and it's free course, high level overview of Web3, which talks about Web2, Web3, and it talks about decentralization. I don't do some of the other stuff. There's another course for that, but I would encourage people to study AI, study Web3, and then this is cliche, but everyone just do it. It's kind of hard. It's kind of hard to learn it only. So again, I'm old enough. I'll go back to Web2. Think about the first time somebody used their phone and they made a purchase. There are many people, X number of years ago, they'd never done that. Now, most people are relatively familiar with that, but the only way to do it is to do it, right? And there's different ways. Even on the phone, you can purchase it by accessing a website, or you can have a wallet there that may have your credit card in it. Or you can have an account with some retailer. So there's many different ways you use your phone, but that's the thing. Until you do it for the first time, do a little study, but then you kind of got to do it too. So I think people should jump into AI and study on Web3.
Okay, yeah, that's really informative. I really appreciate. And your profile
Mm-hmm.
says you speak Spanish. So what about
So
that?
I'm in Texas, and 3 hours south of me, 4 hours south of me is San Antonio. The majority of the people speak Spanish already in San Antonio, so I have exposure to it. I was born and raised in Austin, actually, so I was closer to it geographically. I studied it for 3 years in high school, but when you study a language, you'll forget it, right? If you don't use it. But so I met somebody and got married in college whose family was from Mexico, and so I actually have lived for over 30 years in a Mexican household. My mother-in-law lives with me, so we speak Spanish at home. I have one son. We wanted him to be bilingual. It's great mental exercise. Actually, before this, I was studying Italian with an application on my phone. So I'm a big proponent of languages. But yeah, it's just when I went to high school, you could choose German or French. Those were really all alternatives at the time. To me, Spanish was a no-brainer based on the geography of where I is. So yeah, I'm fluent in Spanish, and I initially, as I started expanding my business, I started in Spanish-speaking markets. But I can service somebody in any state in the U.S. Most of them I'm appointed, and if not, I can get appointed relatively easy. But yeah, I'm fluent in Spanish, and I enjoy it. And that's saying culturally, I'm Mexican. I go to Mexico often, so I've been to my third home is in Mexico because we've gone there so much as a family.
So we touched upon on health insurance, but now I want to ask you
Mm-hmm.
questions about the life insurance. How much life insurance someone needs? And again, regarding life insurance, people have this dogma that life insurance is means basically which is useful
Mm-hmm.
only after you die. So will you please address any of
Yeah.
your insights
So
about
it's a
life
great question.
insurance?
You're a professional podcast. You make me ask great questions, by the way. Thank you. So the thing about life insurance, number one, this is instead they might what I like to say is it is the final love letter to your loved ones. Everybody's going to pass away, and when you do, if you've got one of these things, and life insurance is really a contract between the insured and one of these big insurance companies, and it says upon your passing we will give X number of dollars to whoever you've designated as your beneficiary. And the thing is, the agent, when I write that, I want to help you size the policy to your liking. And then when you pass away, I want to go to your funeral and I'm going to say, sir, ma'am, whoever's left, my condolences for you and your family. I think they're in a better place now. We're not going to be able to replace them, but they, in their final love letter, they've got this. So I've got a check for you here. And I personally have received it. My mom passed away in 2017. So me and my siblings got that. I like that. And so I love the concept of insurance. You said, how much does someone have? It is more art than science. But one of the things that we use in my industry as a rule of thumb is the DIME methodology, D-I-M-E. And I just say DIME because it's easy to remember that way, but I don't necessarily go in that order. And so my point is D stands for debt, I stands for income, M stands for mortgage, and E stands for education. And so not everybody has all those needs, but if you're married and you're working and you got 2 kids, one that I will ask you, how much debt do you have? Do you owe $50,000 on a car? And we'll write that down. Do you have, or let's say it's $40,000 on a car and $10,000 a credit card, whatever it is, your debt, we write down, this is how much debt you have. And then how much do you earn annually? Let's just use the number 100,001 because the math is easy, but make $100,000 a year. Then depending on you and the age of your kiddos, well, if you pass away, what if the spouse isn't working? Suddenly they're going to be missing that for the next 10 years. They're missing $100,000. So if we use 10, and we can use 10 or 15 or 5, whatever the age of the family is, kind of, let's use 10 times 100,000, $1 million. So suddenly we're calculating, oh, you need about $1 million worth of coverage. And then mortgage and education. How much do you owe on your home? I owe $500,000. Again, I'm nice round numbers there. So that's 1.55 is what I came up with there. And then education. If you got 2 kids, how much does it cost annually, and how much is it going to cost depending on if they're young? And so you could, how much is that? That's hard to know, right? But I'll use $50,000 a year right now, multiply that by 4. That's $200,000. You got 2 kids, that's $400,000. And let's assume it's 10 years now, it's going to cost, let's call it $500,000. And so now we're at approximately $2 million. So no, you don't have to buy $2 million worth, but if we look at that and determine that's what your needs are, then that's an estimate. Now, okay, well, how much does that cost? Well, it depends upon, number one, your age and your health, your smoking status, where you live, all those things we can put it in. But then there's a spectrum. If you need $200,000, you can pay different amounts for it. You can actually get a 10-year term, and it'll be very cost effective, very cheap. Or you can buy a permanent policy. And the difference between those, his name applies. If you buy for 10 years, you're paying some low premium each month, for example. You can pay quarterly or annually, whatever it is. If you don't pass away at that time, the contract's kind of over. Now, typically they'll let you extend it, but it's going to cost a lot more. So suddenly it costs a lot more. And so that's the thing. I've shared with you the DIME methodology as a rule of thumb to figure out about how much you want. But then the trick is that we can shop it, and we'll look at different companies. There's a lot of big companies, and depending on where you live, your gender, your smoking status, one company might be cheaper for you than the other. So that's my job as the broker. I just help you, one, estimate how much you want. And the other thing we can do is you say, you know what? I don't know exactly how much I need, but the most I can do is $200 a month. Well, then we can put in $200 a month, and we can look at the different companies, and we can see how much coverage can you get for that. So it's nice, but that's what I do. I call it tailoring. It's kind of like you're like saying, hey, I need a dress for a wedding. And I don't mean you're the bride. You're just going to attend. I'm going to attend the wedding. If you want one, well, we have to measure you, right? And decide, but depending on what the material is and the style, it can cost a lot different. But at the end of the day, we can get you a dress.
And so now, third insurance I want to talk about, it's about long-term care. So can you just tell us more about the long-term care?
That's the one I'm most passionate about, because nobody thinks, and you kind of said, oh, until you die. That's the thing. Approximately, life insurance isn't just for when you pass away, because if you will get a permanent one, it can accumulate some cash value, and you can access that as you need it, for example. So life insurance isn't necessarily just when you pass away. But that's the thing, long-term care, statistically, I'm going to share with you this number. And that's the thing, I got into this kind of through Medicare. 70% of the people in the U.S. that get past age 65 will use some form of long-term care. And really what that means is, I would love to, like I personally am hoping to live to about 90 or so. I hope I live till about 90, and I hope to die in my sleep. But I don't know if I'm going to get hit by a car today when I leave my house. And then the challenge with long-term care is, but actually statistically, there's a 70% chance I won't die quickly. I'm going to kind of need some care before I die. And actually, statistically, when a man in the U.S. needs long-term care, he lasts 3.8 years. Let's just call it 4. So the thing is, there's a 70% chance I'm going to have a stroke, or I'm going to have some kind of disease, or something's going to happen, and I'm not going to die right away. But I'm going to, and in fact, the way the industry define it is when I can't do 2 of the 6 activities of daily living. That means if I can't bathe myself, feed myself, groom myself, if I can't do toileting functions, if I can't transfer, if I can't get out of bed to a wheelchair or from a wheelchair, if I can't do any 2 of those things, a medical professional signs it says you can't, or actually cognitive. If I can't be left alone, if I have some kind of dementia or something, when a medical professional signs it and gives it to the carrier, like for life insurance, often it's a death certificate. For long-term care, it's that Medicare, the medical professional says they can't do it anymore, then it will kick in, and typically it will pay some money. And so you can, just like life insurance, we can size it. But whether you want $4,000 a month or $8,000 a month, we can size a policy, and you can say, I want it to pay for 4 years, 10 years. There are actually a few carriers that will do it for a lifetime, whatever it is, but we can size it. It's just important to have. So I have one on myself now. I have one on myself so that if I have a stroke or something happens, then instead of eating up, like I've saved my whole life, I've got the 401k and investments, all this. I don't want that to get eaten up for us having to spend $5,000 a month for 4 years. So I've got this insurance in place. So that's what long-term care is. And I think it's important to have it in place. I'm very passionate about it. And candidly, I'm going to go ahead and say, I haven't been saying carriers and like that. I'm going to say alz.org. The Walked In Alzheimer's is a nonprofit thing I'm involved in. And Alzheimer's and other forms of dementia are a real problem. So I like long-term care as protection against that. So I'm going to stop right there, Sue, but great question.
So how early someone can buy? Because what is the age to buy the
Well, you can
long-term care
buy it.
insurance?
For one thing, there's a stat that says I think 40% of the people that are on long-term care are actually under 50. So you can buy it quite young, and the younger you are, the cheaper it is. And on the contrary, there's a bit of a curve. Once you start getting into the 60s, it starts getting real expensive. It gets to the point where it almost doesn't make sense anymore. It's going to cost a lot that it doesn't make sense. So there's no one age. But the message is the sooner you buy it, the better. And typically, I'm going to use 70. It's very hard to get it beyond 70. And even if you could at 67, it may be so expensive, it may not be worth it to you. So that's my guidance there. But yeah. So there's no hard and fast rule.
Okay. So if someone wants to make a career in insurance, how can they start? And can they start on
Yes, they
part-time
can.
basis?
And that's what I did. I mentioned in the beginning, I was in it by accident. So number one, to be in insurance, you have to get a license. And really, so there's kind of three things to be able to offer someone a solution of an insurance policy. And I'm talking about life and health. I'm not talking about property and casualty. There can be more. But at the end of the day, you have to have a license in your state, and you have to get appointed with some of these companies. And those companies will not appoint you, one, unless you have a license, and two, you actually have to have some insurance that it's called E&O, errors and omissions insurance. And so you got to have those things to be able to get appointed with the companies to be able to offer it. And so and now the good news is it doesn't take much more than that. So you don't even have to have a college degree. Now you have to be able to pass the exam. So when I help people get into the industry, and I have helped several people across the country, I help them by providing study material. So you can study for exam, practice exam, so you can take it and know before you go and sit. Then you schedule the exam, and you go take it at your state, and you get that thing. And then we will help them find a place to buy your E&O insurance, your errors and omissions insurance. And then we help you get appointed with different companies. But that's what it is. But the good news is it is relatively, I'm excited about it. A lot of people are losing their job. I'm excited about the fact that I can help people just like me. It can be a second career, or to your point, part-time. But that's really, it doesn't take a lot. It takes studying for exam, getting the exam, getting E&O insurance, and getting appointed with carriers.
And I also see you have a website. So if someone goes onto your website, they can find out more about your services and they can schedule a meeting and all. So just tell us about the various channels. Where can someone
Well,
find you? Because your
so
website and
thanks for
all. Yeah,
asking.
I just want because if someone
So
is
that's the thing.
interested,
My name is
yeah.
Tom Basey, and the insurance component is called Basey Insurance. And so to your point, they can go to www.basey-insurance.com. That's true. But if you search me on any browser, I'm basically on all social media channels, and I like to meet people where they are. So, I've recently had open account in Blue Sky and Mastodon. There's a bunch of them. So I'm really on any social media channel. Typically, you can find Tom Basey or Basey Insurance. And so I love to connect with people. So search me on whatever browser.
Oh yeah, I heard about Blue Sky. I heard about Blue
Hmm.
Sky. Actually, I set up the my account there, but I have not been using. So yeah, tell us more about Blue Sky because I heard about it, but it seems you have a very
Well,
active profile
thank you for
there.
saying that. Really, what happens is I try to be omni-channel. So once I establish an account, then I try to put content there that's useful for people on all those channels. And so now some channels have limitations, right? Some you can only put a video on there. Some of them there's a character limitation. So I do have a Blue Sky account and I put stuff there. To me, it's pretty similar to Twitter, I'm going to say, but I don't know a lot about it. This in 20, it's new for me for 2025, but I am using it. But so that's what I do. I try to provide value. Either like this discussion is so wonderful. I plan to chop this up into pieces and share it with people, because each question you've asked me has been very good. And so I hope to kind of share with people who don't find your podcast well, and I'll share the whole podcast too, so they can find it. But that's what I do. I kind of try to make this information available to people on as many channels as I can.
Oh, okay. Thank you. So, do you have any parting message to our listeners? If I ask whatever I want to ask, but in case I miss something, yeah, please.
Well, I think the last thing, I'm grateful for your question. I'm a lifelong learner. And so actually, since COVID, I've actually spent a lot of time. I also try to be healthy. And so here's my hack. My life hack is do whatever you can that's active. It's walking. I try to go to the gym a lot, but whether it's going to the gym, walking, be active. And then how about this? Listen to podcasts just like this to learn stuff. You know what I mean? So that's what I try to do. So my hack is that. My hack is do some kind of exercise and put these ear things in and listen to podcasts and learn. So I do still read. I have books and I read them in the evening, but that's my hack is listen to podcasts and learn while you're doing some exercise. That's my parting shot.
Yeah, I can relate to you so much, because that is what I always tend to do. Because you have to feed your mind all the time, with new education, positive thinking, and all. And there are few things which you are just doing mechanically. For example, if you are on the elliptical for say half an hour or 1 hour, means you are not using brain for anything else. So during that time, you can surely listen to podcast, and you help yourself out, and you are actually
Two-way
making use of the time the best way. You are becoming more productive, and this is the same thing. Means if you are doing the daily household chores, you can do so many things. Yeah, totally appreciate for your insight, and thanks a lot for coming as a guest on New Beginning Inspiration for You podcast. And thanks a lot for adding so much value to our listeners, and we really appreciate all your services and all your help.
I'm grateful for you hosting.
Yeah.
And let's do it again sometime. We'll connect again and we'll talk further. I really enjoyed it. Thank you so much.
Oh, yeah, sure. Sure. Take care. Thank you. Bye-bye. Hey, thanks for joining us. We are blessed to have you as part of our community, and whatever way we can help you, serve you, let us know. Please subscribe and let us know how we can help you, what resources you want. We have lots of free resources and also free collaboration joint venture groups you can join and explode your business, because most solopreneurs quit their business before they launch their first products, and I don't want that to happen to you. And that's why we have special launch service where you can monetize your digitals and become profitable as fast as within 7 days. And if you want to scale your business, join our membership New Beginning Success Collaboration, where we'll provide you MRR and PLR products and collaborations so that you can scale your business with ease and effortlessly. And hey, if you want to sell your digitals all over the world, yes, we will provide you affiliates more than 200 countries. So everything is possible. Just live your dream, follow your dream, and whichever way we can help you, do let us know. Thank you and God bless you.